Ever wonder why the guy with a $25 million net worth gets handed free money from his bank, while the person struggling with $0 gets slapped with a $35 penalty fee? It sounds completely backwards, but it is the cold, calculated reality of how the global banking system operates. The moment you understand how banks classify your wealth determines whether you are the prey or the partner in the financial ecosystem. We are going to trace the exact journey from a negative balance to the ultimate heights of private wealth management, revealing how the game flips entirely in your favor once you cross specific asset thresholds. If you want to finally crack the code on how the wealthy manipulate banking systems to stay rich, smash that subscribe button right now, turn on notifications, and let's dive right into the real tiers of banking power, the negative balance territory. When your account hits zero or drops into the negatives, the bank stops treating you like a customer and starts treating you like a profit center. This is the realm of the predatory $35 overdraft fee. If you accidentally buy a $4 coffee with $0 in your account, the bank doesn't just block the transaction. They approve it and charge you a massive penalty. Mathematically, that single fee amounts to a staggering interest rate of over 1,000%. At this level, you have no leverage. You are forced to interact with automated phone bots or wait in long lines, and the system actively drains the little money you have left to subsidize the perks of the wealthy. The bare minimum struggle. Once you manage to keep a few $100s in your account, you enter the standard consumer retail tier, but you are definitely still paying to exist. Banks frequently hit this bracket with $12 monthly maintenance fees unless you set up a consistent direct deposit from an employer. Your savings account at this stage is essentially a joke, offering a microscopic 0.1% interest rate that guarantees your money loses value to inflation every single day. The bank views you as high maintenance and low yield. You get zero personalized attention, absolute baseline customer service, and you are entirely dependent on standardized mobile apps or traditional branch tellers who see you as just another account number in a massive corporate database. The mass market trap. When your balance climbs into the low thousands, the bank shifts its strategy from penalizing you to actively tempting you with high-interest debt traps. Suddenly, you start receiving pre-approved credit card offers in the mail, featuring flashy designs but carrying astronomical 24.99% variable interest rates. The bank wants you to carry a balance because that is exactly how they maximize their margins on the middle class. They will happily waive the basic monthly maintenance fees now, but they are constantly monitoring your transactional behavior, looking for any opportunity to cross-sell you auto loans, personal loans, or basic insurance products that keep you tied to their institutional ecosystem while yielding them consistent, predictable profits. The premier banking shift. Crossing the $50,000 threshold completely changes the vocabulary the bank uses with you. This is the entry point for premier or gold banking tiers. Suddenly, those annoying ATM fees evaporate, wire transfers become completely free, and you are granted access to a dedicated phone line that bypasses the standard customer service queue entirely. The bank stops trying to nickel and dime you with petty fees because they want to secure your deposit relationship. However, the real trap at this level is the subtle push toward their in-house retail wealth management, where they try to guide your cash into high-fee mutual funds that quietly erode your returns through hidden administrative expenses. The private client threshold. The moment you hit $250,000 in liquid assets, you officially transition into the private client tier. This is where you are assigned an actual human being as your dedicated relationship manager. You no longer walk up to the standard branch teller line. Instead, you are escorted into a quiet, glass-walled office with comfortable leather chairs. The bank's main goal here is to cross-sell you a massive mortgage or convince you to let them manage your investments for a standard 1% annual asset fee. They waive every single operational fee automatically, offer slightly better promotional interest rates on certificates of deposit, and hand you premium credit cards with exclusive travel perks. The true high net worth tier. When you cross the $1 million mark, you enter the elite realm of actual private banking. At this level, the bank's entire business model flips from taking your money to actively protecting your balance sheet. You gain access to exclusive investment opportunities completely hidden from the public, including institutional private equity, venture capital funds, and specialized hedge funds. Your private banker becomes a financial concierge, coordinating directly with your personal accountants and attorneys. The bank will even customize lending products specifically for you, offering highly competitive, non-standard interest rates on massive jumbo mortgages that the average retail consumer could never dream of securing through regular channels. The securities-backed power move. At $5 million, the bank unlocks its most powerful financial weapon, the securities-backed line of credit. If you want to buy a luxury property or invest in a new business venture, the bank will tell you to never liquidate your stock portfolio. The interest rate on this line of credit is incredibly low, often pegged right next to institutional benchmarks. This allows you to access massive amounts of raw liquidity without triggering a single dollar of capital gains tax, completely bypassing the traditional financial friction that slows down regular wealth accumulation. The private bank domain. Crossing the $10 million mark elevates you to the ultra-high net worth brackets of dedicated private banks like UBS, Morgan Stanley, or specialized boutiques. Here, the traditional concepts of checking and savings accounts completely disappear. The bank builds entirely custom financial structures for your wealth, including complex domestic and international trusts, private foundations, and specialized generational wealth transfer mechanisms. You are invited to exclusive closed-door networking galas, high-end charity events, and private economic briefings. The bank treats you as a major institutional partner, and your dedicated team is available 24 hours a day, 7 days a week, to handle any financial whim across the globe. The Family Office Nexus. When your assets touch $25 million, you have officially outgrown standard private banking and enter the realm of virtual or multi-family offices. The bank acts as a secondary infrastructure provider to your personal chief financial officer. At this legendary tier, you can execute the famous buy, borrow, die tax strategy at an absolute masterclass level. You buy appreciating assets, borrow heavily against them at rock-bottom institutional rates to fund your elite lifestyle, and eventually pass those assets to your heirs with a stepped-up cost basis, effectively paying zero income tax. The bank treats you with absolute deference because your massive capital pools can move markets. The final blueprint revealed. Ultimately, the banking system is a massive mirror that reflects your financial vulnerability back at you. When you have no money, the system treats your lack of liquidity as an expensive risk that must be heavily penalized. But the moment you achieve true wealth, your capital becomes a powerful resource that the bank will desperately pay to hold on to. The fee was never an actual punishment. It was simply a calculated quote measuring exactly which side of the financial ledger you stand on. The entire game is designed to reward those who have already won, proving that the real secret to banking isn't just saving money, but scaling the asset ladder. The contrast between the bottom and the top of the banking system is brutal. But understanding this exact blueprint is the first step to manipulating the rules in your own favor. Do you think the current banking tier system is fundamentally unfair to everyday consumers? Or is it just the natural reality of managing financial risk? Drop your honest perspectives in the comments section down below. Smash that like button if this breakdown opens your eyes, and share this video with someone building their wealth. Make sure to subscribe to the channel and hit the notification bell so you never miss our deep dives into the mechanics of money. See you next time.